To pay tax or not, the big Shakespearean dilemma. Truth be told, if you are not filing your tax in a compliant way, then anyways the government is going to come for you. On top of all this, now comes this entire debate on inheritance tax. Congress's man with the typical foot in the mouth syndrome, Sam Pitroda, leading the charge this time for essentially putting up the Congress on the back foot.
If, let's say, one has $100 million worth of wealth, and when he dies, he can only transfer probably 45% to his children. 55% is grabbed by government. That's an interesting law. It says, you in your generation made wealth. You are leaving now. You must leave your wealth for public. Not all of it, half of it.
And since then, the flurry of justification, Janab Ramesh, Chief of Congress Publicity Wing, taking to Twitter and almost just stopping short of expressing his clear-cut disgust with the statement that was made by Mr. Pitroda. But the purpose today is not to look at why Sam Pitroda said what he said. The purpose today is to explain to you in very simple terms as to what this entire case of inheritance tax is all about. Let's say if your parents, let's say, have built assets worth more than 20 crores, should you be willing to pay tax on an asset which has been bequeathed to you? Should you pay tax on 50% of the value of the asset you're left with? But the fundamental question is just this: should you be paying tax on an asset which has been built by your previous generation? Let's look at some international experiences now. In countries like the United States of America, the United Kingdom, France, Germany, Japan, however, the specifics of how it is to be levied and its historical context varies from one country to the other. In the US, for instance, the concept of inheritance tax is very, very closely linked to the state tax framework. Unlike the federal estate tax, which is imposed on the estate itself, the inheritance tax is paid by the beneficiary upon receiving money or property from the deceased's estate. As of 2021, only 6 states in the US impose an inheritance tax. These are Iowa, Kentucky, Maryland, Nebraska, New Jersey, and Pennsylvania. The tax rates and exemptions vary by state, with some states offering exclusions for certain classes of heirs or applying lower tax rates to transfers which have been made by close family members. Inheritance tax rates in the US can range from less than 1% to about 20% of the inherited property or the cash value. However, the tax is typically calculated on the portion of the property or the money which exceeds a specific threshold. In 2021, Elon Musk himself had spoken out openly in favor of an inheritance tax. But Warren Buffett takes a completely different approach to wealth management. On this front, Buffett believes philanthropy in your existing lifespan is what you should be focusing on, rather than getting stuck with what should happen to your wealth and whether your children post your death should be paying tax or not. There is a report, by the way, which has been released by the UBS Global Wealth Management System in 2023. Out of a total of 137 individuals, 53 inherited a collective sum of $150.8 billion from their families. Now, this inheritance is more than the actual wealth creation of $140.7 billion, which was done by 84 individuals who actually created business and assets on their own. Now, contrary to the United States, India currently does not impose a tax on inheritance, and that's why this entire debate. The concept of inheritance tax, though, is not new to India. Approximately 4 decades ago, a similar taxation system did exist in the country, but it was abolished by the then Prime Minister Rajiv Gandhi way back in 1985. Former Finance Minister P. Chidambaram, on multiple occasions, spanning from 2011 to 2013, voiced his proposal of implementing an inheritance tax as a means to bolster government revenue. Similarly, during the initial tenure of this NDA government, way back in 2014, the then Minister of State for Finance, Jayant Sinha, on several occasions championed this concept of levying an inheritance tax.
which is why we need estate taxes, so that we take away at least 50 or 55% of the advantage that dynastic business people already have right now. So it's about leveling the playing field and creating opportunity. By the way, taxes in the US and elsewhere, you said I've spent a lot of time in America, and I have. I can tell you, estate taxes are 55% there.
In 2018, the then Finance Minister Arun Jaitley also advocated the idea of inheritance tax, highlighting that hospitals and universities in developed nations garnered substantial endowments, partly owing to the presence of this inheritance tax. Known as estate duty, this tax was introduced in India in 1953. It applied to the transfer of assets from a deceased individual to their heirs, with the tax amount calculated based on the total value of the deceased's estate. Inheritors were then obligated to pay a percentage of this value to the government as tax. But now in India, this entire debate has assumed a massive political overtone. We're obviously in the middle of a fiercely contested Lok Sabha election. The Prime Minister is accusing the Congress party of plotting to take Mangal Sutras away from Indian women. Now, whether you believe it or you don't, reality is that inheritance tax now is not being spoken about simply as inheritance tax. It's now being converted into an attempt being made allegedly by a political party to take your assets away. If you want clarity on that, you should be looking at our videos on thesquirrels.in, which talk about which party's manifesto is speaking about what.